Where do banks put their money? And whenever you go in and visit your banker, the chances are that he or she is always trying to get you to invest your money into an RSP or a GIC or a mutual fund managed by the bank. It's safe and you will earn a good return, is what they tell you. Now, most of us, we don't stop to think and ask the following questions, but we really should. Why is my banker telling me this? What does the bank actually invest in themselves? Well, banks, they make about $2 billion every 3 months in profit. So you'd think that looking at what they do with their money is a good idea. Keep watching this video to see exactly how banks make lending decisions and how banks evaluate risk. If you leave here with nothing else today, I want you to leave here with the clear understanding of this next slide here. This here explains to you how banks make lending decisions and how banks rate risk depending on investment classes. This is super important because banks, every 3 months, they make $2 billion in profit. Now, I want to know, and I think you want to know as well, what the bank thinks and how they think and how they make their decisions so that we can copy them. Now, back when I was in the bank as a financial planner, we used to have clients who used to come in and they would have $100,000, be it from cash or they might have gotten an inheritance or insurance payout. In most cases, however, it was in the equity of the home that they lived in. So they'd come to us with $100,000 and we'd explain to them that in this world, there are three things that you can invest your money into. You can buy a business, buy some shares, or invest in a property. Now, I understand that there are many other types of investments, but everything that you might be thinking of is pretty much a derivative of one of these three things. So let's look at the options. You have $100,000. You have to choose where you want to be putting your money into. Now, I want you to imagine that tomorrow you walk into your bank, the bank that you've been dealing with for the last 20 to 30 years, walk in with your $100,000 in your bag, and you throw it down on the bank manager's table and you say to him, "Hey, Mr. Bank Manager, I've been banking here forever. My family's been banking here forever. I've got great credit. I pay everything on time, and I would like to buy a business. Here's my $100,000. How much will you lend me to go off and buy a business?" The bank is very reluctant to lend you any money to purchase a business. And it's because the majority of independent businesses, they fail within the first 5 to 10 year period. But let's just say that this bank was being generous on this particular day and we're willing to give you $100,000. What would that mean for you? What would it look like? So that means that now you've got $200,000 in your pocket and you can go out and buy a $200,000 investment. Now, keep in mind that what we're trying to do here is we want to buy an investment, a passive investment. At $200,000, do you think that you've bought a turnkey business where you can give the keys to a 16-year-old and walk away and that business can run itself? Or do you think that it's more likely that you've just bought yourself a job? Well, at $200,000, you're more than likely buying a job. Buying a business that you are going to have to work in. Now, you probably have a job that you like, so you don't really want or need this. And it's probably not a job that's going to be 9 to 5 job either. Anybody who's self-employed will tell you that it is a 9 to 9 and weekends as well type of gig. So while it is an option, it's not the option that most people will take. Now, don't get me wrong. The majority of my wealthiest clients are business owners, but they do own businesses worth a lot more than $200,000. Okay, so that's option one. We say, "Thank you, Mr. Bank Manager. Thank you for that offer." Now let's just look at option number 2, which is shares. So this time, Mr. Bank Manager, I want you to go out and I want you to go out and grab your number 1 financial planner and I want you to bring her into the room. I'm going to give her my $100,000. How much will your bank lend me to invest with your number 1 financial planner? I'm going to give her my $100,000. In fact, if she tells me just to buy your stock on the TSX, I'll listen to her and I'll buy it because I trust you guys and I know that you have my best interest in heart. How much do you think that your bank will be happy to lend you to invest with their financial planner, with their best financial planner? The answer is most likely 0. Now, there are a few exceptions to this based on net worth and how much you hold with the bank, but ultimately for regular people, the answer is 0. But again, let's be generous and let's say that your bank is willing to lend you $100,000 and match your investment. That would now mean that you have a $200,000 stock portfolio or a managed fund portfolio. So that's all good. We're pretty clear and we're following along so far. The next question is, Mr. Bank Manager, thank you for those two options. Let's talk about a property. I'd like to buy a property. I have $100,000. I don't know where this property is. It could be here. It could be in Abbotsford. It could be in Squamish. It could be in a different province. I don't know if it's going to be a house, a duplex, a townhome, or a condominium. I haven't decided on that yet, but I'd like to buy a property. Now, as long as you qualify, can you guess how much your bank will be willing to lend you to buy this property based on your $100,000 down? Well, the answer is $400,000. So you can go out and actually buy a property worth $500,000. At this point, I want you to ask yourself this question. What does it tell you when your bank is only willing to lend you maybe $100,000 to invest with their financial planner versus $400,000 to invest in property? Which one of these two options is riskier? Well, according to the bank's numbers, shares. According to the bank's numbers, shares are at least 4 times riskier than property, where property is 4 times safer than the stock market. Now, I'm not saying this. The numbers are saying this. And at this point, I actually want you to get a little bit angry because all of this time, your bank is saying, hey, Mr. Customer, come in here, give us your money. You're richer than you think, and we'll look after it. And we're going to put it all over here. This is the message that's being fed to all of us. Now, once your mother allowed you to get out of the saving stage, she said, okay, you can get a financial planner and you can go and put your money here. When the reality is, your bank wouldn't do that.